Here's a detailed summary of Oracle's Q3 fiscal year 2025 earnings call, suitable for reading aloud. Oracle FY25 Q3 earnings call summary. Thank you for joining us for Oracle's third quarter fiscal year 2025 earnings conference call. Today, we'll cover our key financial results, management's outlook, and significant highlights. Key financial metrics and performance. Oracle delivered an exceptionally strong quarter, marked by unprecedented booking strength and robust cloud revenue growth. Backlog and RPO. Oracle added a remarkable $48 billion to its backlog this quarter, bringing the total remaining performance obligations, or RPO, to $130 billion. This represents a substantial 63% year-over-year growth, and importantly, does not include contracts from Project Stargate. RPO serves as a leading indicator of demand for Oracle's cloud services. Total cloud revenue. Total cloud revenue, encompassing SaaS and IaaS, grew by 25% to $6.2 billion. SaaS revenue reached $3.6 billion, up 10%. IaaS revenue experienced significant growth, up 51% to $2.7 billion, building on the strong 49% growth from the previous year. Total cloud services and license support revenue. This category, a key revenue driver, grew 12% to $11 billion. Infrastructure subscription revenues, including license support, hit $6.2 billion, an 18% increase. Oracle Cloud Infrastructure, OCI driven by record AI demand. OCI revenues surged 51% in Q3 and 54% excluding legacy hosting. OCI now has an annualized revenue of $10.6 billion. OCI consumption revenue rose an impressive 57%, indicating demand continues to outpace supply. AI segment within infrastructure. The AI segment of the infrastructure business showed remarkable growth, with GPU consumption revenue nearly 3.5 times higher than last year. Cloud database services grew by 28%, with an annualized revenue of $2.3 billion. Autonomous database consumption revenue was up 42%, showing acceleration as the business scales. Total revenues. For the quarter, total revenues reached $14.1 billion, an 8% increase from the prior year. Gross profit and operating income. Gross profit from cloud services and license support increased by 10%. Operating expense discipline continues, with expenses growing at a slower rate than revenue. Q3 operating income rose 9%, and the operating margin was 44%, a slight increase year-over-year. Earnings per share, EPS. Non-GAAP EPS was $1.47, up 4% in USD and 7% in constant currency. GAAP EPS was $1.02, up 20% in USD and 25% in constant currency. Cash flow and capital expenditures. Operating cash flow for Q3 was $5.9 billion. On a trailing 12-month basis, operating cash flow rose 14% to $20.7 billion. Fiscal year 2025 CapEx is expected to be a little more than double last year's, around $16 billion, as Oracle front-loads purchases to anticipate strong demand. Shareholder returns. Oracle continues its commitment to shareholder value through innovation, acquisitions, repurchases, and dividends. This quarter, nearly 1 million shares were repurchased for $150 million. The quarterly dividend was increased by 25% to 50 cents per share. Management's forecasts and future outlook. Oracle anticipates continued acceleration in revenue growth in the coming years. FY25 total cloud infrastructure revenue expected to grow faster than last year's 50%. FY26 revenue target. Oracle is more confident than ever in achieving its $66 billion revenue target for FY26, indicating around a 15% growth rate. FY27 growth rate, expected to be around 20%, surpassing previous guidance. Q4 guidance, non-GAAP, assuming stable exchange rates. Total revenues, projected to grow 8% to 10% in USD, 9% to 11% in constant currency. Total cloud revenue, expected to grow 24% to 28% in constant currency. Non-GAAP EPS, anticipated to grow between -1% to +1% in USD, $1.61 to $1.65, or 0% to 2% in constant currency, $1.62 to $1.66. The Q4 EPS guidance is negatively impacted by 3 cents due to recognized losses from an investment. Significant risk factors. While not explicitly detailed in this segment of the call, management reminded listeners to review their most recent SEC filings, 10-K, 10-Q, for a complete discussion of risk factors that could materially affect future results. These typically include intense competition in the cloud market, execution risks related to rapid expansion and infrastructure build-out, economic uncertainties impacting customer spending, reliance on key technology partners, cybersecurity threats. Highlights: record bookings and RPO growth. The highlight of the quarter was the unprecedented booking strength and the substantial increase in RPO, showcasing massive demand for Oracle's cloud services, especially for AI workloads. OCI's dominance in AI. OCI is positioning itself as the destination of choice for both AI training and inferencing, driven by its technological advantages, speed, and cost-effectiveness. Gen 2 Cloud Architecture. Oracle's Gen 2 Cloud Architecture continues to be a strategic advantage, offering flexibility and superior performance for AI. Rapid cloud region expansion. Crossing the 100 cloud region milestone and planning significant further expansion, including multi-cloud deployments with Azure, Google, and AWS. AI Data Platform launch. The introduction of the AI Data Platform enables existing Oracle database customers to leverage their data with leading AI models, unlocking significant new business opportunities for inferencing. Strategic SaaS momentum. The company sees customers migrating to the cloud for its advanced functionalities, particularly AI agents embedded in its Fusion applications, creating a strong motivator for on-premise customers to move to the cloud. Efficient CapEx strategy. Oracle's approach of building data centers smaller and expanding based on demand, coupled with high standardization and automation, contributes to strong margins and efficient capital deployment. Lowlights. Capacity constraints. Demand for OCI, particularly AI-related, continues to exceed supply, with component delays impacting capacity expansion this year. Oracle expects these to ease in Q1 FY26. EPS headwinds. Q3 EPS was negatively impacted by a higher-than-expected non-GAAP tax rate and currency headwinds. Q4 EPS guidance impact. Q4 EPS guidance is negatively impacted by 3 cents due to recognized losses from an investment. Most important statements from management. Safra Catz, CEO. This was our strongest booking quarter ever by a huge margin, as we added $48 billion to our backlog. Our RPO balance is now $130 billion, up from $97 billion last quarter, and up from $80 billion last year. That's a growth of 63% year over year, and this does not include any contracts with Project Stargate. What we are seeing in the market is that we are the destination of choice for both AI training and inferencing. This is due to the fact that our Gen 2 cloud is faster and therefore cheaper than our competitors, and also due to our ultra-high-speed networking engineering. Record-level AI demand drove Oracle Cloud Infrastructure revenue up 51% in Q3. Our infrastructure cloud services now have an annualized revenue of $10.6 billion. We are confident that total cloud infrastructure revenue for fiscal year 2025 will grow faster than last year's 50%, with even greater growth anticipated for fiscal year 2026. Our confidence in achieving our $66 billion revenue target for FY26 is stronger than ever, indicating around a 15% growth rate. I expect that our fiscal year 27 growth rate will be around 20%, surpassing my previous guidance. Larry Ellison, Chairman and Chief Technology Officer. The capability we have is to build these huge AI clusters with technology that actually runs faster and more economically than our competitors. So it really is a technology advantage we have over them. If you run faster and you pay by the hour, you cost less. Oracle has developed a new product called the AI Data Platform that enables our huge installed base of database customers to use the latest AI models from OpenAI XAI and Meta to analyze all of the data they have stored in their millions of existing Oracle databases. This AI inferencing will be another great, large new business for Oracle. We believe that inferencing presents a more significant opportunity than AI training. There are millions of Oracle databases worldwide, and the data within them will be instrumental in training AI models and creating agents and applications. Our applications will primarily be AI agents, and they will evolve into interconnected AI agents. Consequently, it will be challenging to distinguish how much revenue comes from AI agents compared to the rest of the applications. All of our applications are transitioning to become AI agents. This concludes the summary of Oracle's Q3 FY25 earnings call.